These signals are provided for educational purposes only and should not be treated as investment advice.
This is Huskins with the Forex Training Professionals reporting on the trade which we conducted in a live trading room on the 13th of September, which is a Monday. We met at for the European session at 4:30 a.m. and we issued a trade which wasn't filled in. We revisited that trade at 11:30 and we changed our pending order to a market order. We faded our trade. So watch this video to find out the reasons why we first of all chose the EurCad pair, why we chose a particular level to go short from, how we came up with a top down analysis that we need to go short on the EurCad pair, why did we choose our take profit levels, and it'll answer the question to what is fading and when to use that. We started off looking at the currency strength meter. The currency strength meter has shown us that the play which has been going on for the longest duration in the sense at least the last 10 days is the eurozone currencies versus the commodity currencies. If you notice, either the reds or the blues are is the highest or the lowest currency normally. In this case, we have euro, which is the strongest. Yesterday we had the New Zealand dollar, which was strongest, and the CHF, which was weakest. We had the Australian dollar strongest, and the eurozone currencies weakest. We had the Canadian dollar strongest, and CHF, which was weak. In short, over the last few days, we've either had strength in the commodity currencies against the backs of the European currencies, or vice versa. So one of the best currency pairs to actually trade would be to take a commodity currency and pair it up against the eurozone currency, and that's we looked at several. However, the best trade opportunity landed up on the EurCad pair. The daily chart, as you can see right now, exhibits a downtrend. We are in a downtrend, and rightly so, because the eurozone is still having a lot of problems, especially euro is having a lot of problems. Uh, the stress test which was conducted in the on the banks are now being questioned, while as there is a high likelihood that we'd have a second round of monetary easing or quantitative easing. That means more people, more governments printing currencies. Now, the fortunes of different currencies will rise and fall based on how much that country prints, but Canada has always been a lot more conservative in compared to the rest. Besides that, Canada has amongst the strongest banking sectors and the strongest housing sectors, followed by a decent employment report for the month of August. All in all, it puts Canada into a decent position to appreciate in value, especially if the value of the commodities increase in value. And why would the commodities increase in value? Because more paper money might be printed. So now we establish fundamental reasons on a short EurCad position. On the daily chart, we establish a technical reason for EurCad short position. The technical reason being that we could be this could be a head and shoulder or a consolidation, a rectangle in a downtrend. A rectangle in a downtrend is normally considered to be a downward continuation pattern, and the way you trade that or head and shoulder pattern with a left shoulder head and right shoulder is that you wait for the neckline to break, and that would give us a short position or a short entry, but we'd wait for the price to retest the neckline, and that's what it is doing today. So all in all, this neckline can turn out to be a resistance level, and that's what our estimation is, that it would in fact turn out to be a resistance level, and from now it might turn around and go down. Then we looked at the 4-hour chart. Our 4-hour chart gave us a decent price point, which was 1.3245-ish area, and between 4.5 and 5.4 we had a lot of wicks, a lot of 4-hour wicks. Let me count them for you. 1, 2, wicks basically are rejection areas. That means the price goes out there and retraces. So 4 areas or maybe 5 areas of wicks on the 4-hour time frame, which tells us that perhaps the area between 1.3254 and 1.3245 turns out to be a pretty strong resistance area. Then we looked at our 60-minute chart. Our 60-minute chart also gave us the same analysis, however from a different perspective. We saw the low of this consolidation being 1.3246 area, while as the high of this consolidation being 1.3339 area, with added potential support turned resistant levels out here. So in short, if this downtrend needs to continue, we might expect price to maybe penetrate a little bit into this consolidation area and fall down after that for this downtrend to continue. Then we looked at the 5-minute chart. The 5-minute EurCad chart showed us that we had made a 1 2 3 top, 1 2 3, and we got a short entry, or if you were simply trading the 5-minute chart, would be from 1.3 to 1.17. Not only that, we did at that time make a double top formation, which was broken out here, at the same 1.32117 ish area, and it provided us with a short opportunity. However, that is, we do not trade just the 5-minute chart, and looking at the top-down analysis, we felt that the 1.3247 was an appropriate level to maybe go short from, and the best level to go short from would be right in the middle of the consolidation on the 4-hour chart, which was 1.3277 area. So now when we were placing the trade at that time, we did not know whether the market would in fact retrace and go much above these highs. Though to keep our analysis intact, the price might retrace up till 1.3277, but that may or may not happen. So that we do not miss out a good trading opportunity, and it's a psychological massage which we give ourselves, is that we then allow ourselves to enter in smaller lots so that we do not potentially miss out on a good trading opportunity like what we've done in the last 8 to 10 days, wherein we've had some fantastic trades, but we've missed out on good trading opportunities by maybe a few pips, maybe 4-5 pips, or 10 to 15 pips maximum, and they've gone in our favor of maybe 200 pips and hit our target levels. So that we don't start making incorrect decisions, we allow ourselves the flexibility of going short at multiple levels and averaging our position, though we know that the best level to go short is 1.3277. That's why I issued a trade alert to go short at market. At that time was at 1.3234. We went short at 1.3234. Since another decent resistance level was 1.3247, we went short at 1.3247, while as our main order is sitting at 1.3277 and waiting to be filled. I hope you all enjoyed this presentation. You can send me emails to hg@huskins.ca if you want to, or if you have any questions regarding this video. Thank you and have a wonderful day.